Welcome back to Morning Trade Live. We're looking at Google parent Alphabet, set to report earnings this afternoon. We have a preview for you. Tony Zhang, chief strategist at Options Play, joining me now. What are you watching for when it comes to Alphabet?
Yeah, right now, this is not just an alphabet trade. This is really more of a macro trade where, we have a bit of a rebound here in the markets as there's quite a bit of cautious optimism across the board. And technology is really the main beneficiary of that right now. You have tech up about 2.5% today. And Alphabet reporting this afternoon with the ambitions that they have with regards to AI and just the relatively incredibly cheap valuations actually that we have here on Alphabet. That's why I really like this going into earnings this afternoon.
And within the Alphabet story, whether it's generative AI, large language models, or is it the YouTube story? Google search doesn't seem to be a hot spot anymore. From what I hear, ChatGPT and things like that are really jumping ahead a bit, or gaining some traction, I should say. Under the Alphabet umbrella, what's working?
You're absolutely right. Search is definitely something that investors should be concerned about long term. But YouTube has been a pretty strong business in conjunction with that. But as you said, the AI ambitions that Google has. I think they've done a really good job recently catching up to ChatGPT with regards to the integration of their AI models into the G Suite and their entire product range. We're starting to see just the very early days of what Google can do with regards to AI. And I think this is really where at some point this will be far more ubiquitous within your Google suite of products is the introduction of Google Gemini into that. And I think that's really where the long-term ambitions for Alphabet stands. And, when it's trading at about 17 times forward earnings, this is by far one of the cheapest ways to get exposure to AI for the future, especially when the industry is trading at around 20 times forward earnings. You're trading at a pretty heavy discount here. Net margins of 28% is well north of the industry average. So you're trading, you're investing in this particular stock at a very attractive valuation. And arguably, even before the sell-off, Google or Alphabet was trading at a pretty reasonable valuation. So now we've taken about a 25% haircut on that. This is really where I think this looks really attractive going to earnings this afternoon.
That brings us to our example trade. I mean, there's no doubt that these types of companies, and Alphabet is not immune, face all kinds of legal battles, whether it's AI battles, all kinds of regulatory battles, cross the ocean battles legally. So that is something that weighs on these kinds of stocks. So I do wonder about that. But the valuation call, as you said, and that it looks better than some of the others in its group. Tell us about an example trade.
And before I jump into the trade, just what you mentioned with regards to the regulatory environment, we did get some good news this week, with the EU fines or the fines for Alphabet being far smaller than we were anticipating. And I think that's been received fairly positively by investors. So I think the right trade structure going to earnings this afternoon is to be selling premium, because implied volatilities on Google options are quite expensive. And especially when we expect that implied volatility to collapse after earnings, I think this is an opportunity to capture some of that. So I'm going out to the May 30th weekly expiration. I'm looking at selling the 155, 145 put vertical. Earlier today, you can collect about $3.60 for that credit spread. Right now, you're probably getting closer around 315, 320 at the moment because we've rallied a little bit since the open. But this is really where you can collect some premium going into the earnings announcement with limited risk to the downside. And if it does rally from here, this gives you another opportunity to collect some premium and maybe even roll this up and continue to collect premium as Alphabet hopefully starts to trade at a more reasonable valuation, in my opinion, closer around 20 to 21 times forward earnings. I think is a much more reasonable valuation for Alphabet to be trading at over the next few months.
And just big picture market thought, are you hearing anyone saying or looking for indicators that the bottom may be in?
I think there's a lot of indicators that the bottom is in. You have the VIX below 30%. Alongside with that, you have the VVIX, the volatility of VIX continuing to decline. This is a good sign that there's a bit of exhaustion here from sellers. And typically market bottoms, what you typically see is that the initial spike in VIX is not the actual bottom. You actually get a bottom usually about 3 to 4 weeks later, and that's exactly what we saw. We have the initial spike in VIX back in very early April, and now about 3 weeks later, we've got VIX getting below 30%, and that is a pretty good sign that we are near the bottom. On top of the fact that SPX traded down to the 5,100 support level on Monday and held that level. Those are all really good signs that we have a temporary bottom. And again, that's why I think we take a more cautiously optimistic tone to the markets right now. You have Trump that basically yesterday announced that he wasn't going to seek firing Chairman Powell. That kind of relieved a lot of anxiety from the beginning of the week. And right now, I'm really looking at SPX at 5,500. If we can get back above that level, things look a lot better here for equities.
Yeah, and so I've been asking you specific questions, Tony. So anything that you're thinking about that I didn't mention?
Right now, I think the two big things that we should be thinking about are trade wars and the concerns around the treasuries and the safety of treasuries and whether or not there is any concern around the quote unquote risk-free nature of treasuries. And I think this week we got a de-escalation on both fronts. The softening on the rhetoric with regards to China and the lack of, or rather President Trump being explicit in saying that he's not going to seek firing Chairman Powell. Those are the two big macro themes that I was looking at, and that's really what why I'm taking a much more bullish approach here to the market, and I feel a lot more confident that we have put in a market bottom here for the near future.
Save the sound bite, everybody. Save the sound bite, and let's see if this was it. Tony Zhang, it's great to see you. Chief Strategist, Options Play. Thank you very much. I think a lot of people would love to hear that the bottom is in. There's no way to really know.